today's webinar, Amazing Metrics, the accounting, tech stack, and presentation for professional SaaS metrics. And we're going to learn essential metrics and accounting best practices for early stage SaaS success with insights from our CEO and chairman from MontPac, Mr. Monty Montgomery, and the founder and the creator of the SaaS CFO, Mr. Ben Murray. I'm going to take a look at my agenda. For some reason, I can't. Okay. Introductions and housekeeping. My name is Don Irwin. I'm the VP of Sales here at MontPac. What I'm going to do is let's try to keep this interactive and just try to keep this light. Although the microphones are turned off, if you have a question as we're rolling along and moving from slide to slide, if there is a question that you have, please throw it into the chat here. I will be monitoring the chat, and as it permits, I will interject and we will ask some questions and answer some questions with our panelists. And so without further ado, please allow me to introduce Mr. Monty Montgomery and Ben Murray. Monty, take it away.
Thanks, Don. Hi, everyone. So I'm Monty Montgomery, and I'm the CEO of MontPac. Been CEO for 9 years. You may wonder why my name is Monty Montgomery and the company name is Montgomery, but actually second generation CFO. My father started the firm and he was a 3-time Fortune 500 CFO, very competent CFO. I followed in his footsteps and largely turned into a SaaS CFO. So this topic is something that I love, and currently MontPac, we have over 800 clients, about 390 employees. And of those clients, well over 115 SaaS companies. So this is something we're very passionate about and doing it properly. Met Ben years ago, loved his content, love him as a person, and really appreciate what he does as a thought leader for the SaaS world. So Ben, why don't you give a quick background on yourself?
Yeah, thanks, Monty and Don. Yeah, great to be here. And yeah, a little bit about myself. I see a lot of familiar names here, guys. So thanks for joining. But yeah, I was an in-house CFO. I got started in the airline industry and then got into software in the early 2000s, back in the on-prem days. Was an FP&A guy, so worked my way up through that. Got my CPA, MBA, and then became an in-house SaaS CFO for founder and PE-backed companies. And then the last 4 or 5 years or so, doing fractional CFO work coaching. Of course, I have my academy where I've got a ton of resources and content, my blog, newsletter, podcast. So really focused on software finance, whether that's SaaS, AI, and yeah, looking forward to today's agenda. So thanks, Monty.
Great. Yeah, so we're keeping this very light on slides, more interactive, and just sort of going deep on some of the core principles. And these are all meant to be the things that are the foundations for great metrics. And why don't we proceed to the next slide? So this is an example of an excellent SaaS P&L. Balance sheets are all pretty similar. I think the main thing you need is deferred revenue accounts, things that are specific to SaaS. But if you look at this, you'll see the operating expenses down below, this departmental. I think that's a key. The real, nuance here is in the revenue streams and the COGS. So Ben, why don't you walk us through these two sections and how you sort of designed them here?
Yeah, definitely. So yeah, this is what I call the modern SaaS P&L, or now just the software P&L, whether you're AI business or SaaS. And I don't know if any of you guys follow my newsletter or LinkedIn stuff, but there's part of this, we still have to put fundamentals in place here. And please, if there are questions, comments, throw those in the chat. We'll be watching. But they're fundamentals that just never go out of style for a reason. And I think we're trying to get a little too fancy with AI first in the back office with finance and accounting. But first, we've got to put that data structure in place. And we'll talk about the 4 key SaaS data sources. But with this is one of my top coaching calls, what I help founders with. But we've got to have the correct revenue setup. We have to keep subscriptions separate from variable revenue, and variable revenue today can be usage-based, consumption, potentially outcome-based revenue. Maybe we have onboarding in the form of professional services, and I've got a little typo there, but managed services. If we have people-powered service revenue on a subscription basis, we've got to keep that separate, and you see that a bit in SaaS. Maybe you have a hardware play, point of sale system, and then other. really important because this dictates then how this data flows to our metrics, to our forecast, and we can't commingle revenue streams. And I see this a ton, Monty, and especially I'm sure you see this when you're helping folks with the debits and credits, but all those general ledger accounts underneath the hood here have to be distinct, right?
Yeah,
So we can
it,
roll it up to the proper spot.
it's a huge point. And one of the things we do at MonPac is we do due diligence for venture capital firms. And the partner will send an email saying, "Hey, I'm 80% sure I'm going to invest in this. Can you just look over their books and make sure that the revenue is real, that they're recognizing it properly, that customers are paying for it?" And a lot of times we'll see a commingling of recurring and
Mhm.
non-recurring. And maybe it's too simplistic. It's just revenue, one line, and then other. And then we have to break that apart, and it slows down the process of the due diligence, and it can also lower valuation. So I think, transparency is important. So I love this structure and how you've broken it out. How do you
Yeah,
relate
and
the cost of
yeah.
goods sold section to that?
Yeah, then COGS. We've got to make it easily consumable for board investors, potential investors. I was just talking to a founder this week about this same thing and just how the P&L should be structured, where people are falling. So now COGS, right? So the cost to deliver our revenue, the cost to deliver our contractual obligations, and in pure play SaaS, kind of SaaS 1.0, we had tech support. Maybe we have some onboarding in the form of services, and then we had DevOps, so the hosting, the architecture, uh, compliance, security, and of course now AI compute cost, inference cost in there as well. But then maybe we've got customer success. And I always kind of quote like the Jason Lemkin version of product adoption, and they're focused on helping the customer versus selling. That then they go up in COGS. Now, if they're more cross-sell expansion, they're going to go in sales, or maybe we have to allocate the CS team, so that you've got to look at that internally. And then we could have hard costs with that variable revenue. For example, Twilio. I have founders who are sending messages, emails through Twilio as part of their platform. They monetize that, but then you have to track that separately. And the big thing here, one, Monty, is our accurate gross profit, because I don't know how many times I can tell you I've restated the gross profit after we've done this assessment. And then the second thing, Monty, is margins by revenue stream. Let's say we're producing 60% margins overall. Well, what's contributing to that? Do we have good subscription, bad services margin, which I see a lot because that's overlooked? How's our variable margin? So I don't know, Monty, what you see here, but that clarity is so important.
Yeah, I think it's tricky, especially in the earlier stages, seed and before, how you deal with customer success. And does an allocation make sense? And I think that you have to sort of draw a line in the sand. This is how we're doing it, and then maintain consistency. Would you agree with that notion?
Yeah. And I had this, it's funny, guys, and please post any questions here, comments, or your thoughts on this. But I just had a conversation yesterday with a founder and talking about, right, it's early stage and the current, like they had another fractional CFO, but they weren't really attuned, which is how early stage SaaS works. And they had, say, all these different roles, but they were doing wearing multiple hats, which is so
Yeah,
common. And it's like, I think it's fine to say allocate a person up to two departments, but I've seen founders who allocate one person to five departments. Then we lose auditability. Then it's just kind of playing with numbers and how do we prove to an investor that this is really solid? So I
yeah,
think it's like, all right, what are these people doing? All right, let's allocate, let's keep it, let's maybe review it every quarter.
yeah. That's a good point. Over allocation, it loses its effectiveness and doesn't seem realistic. Hardware, for some reason, hardware combined with SaaS follows me around and haunts me. It doesn't matter if it's a robot or Don and I actually met at a company called AutoMile that had a little thing that went in the car and for fleet tracking software. And it adds complications. And I think that it's great to make sure the accounting on that, whether it's a company owns the asset and then depreciates it, or if it resells it. But that's something that I think is more common now. And you brought up AI variable spend. I heard
Mhm.
last week about a CFO saying we now have a token budget for our employees, which tokens hopefully get cheaper and cheaper. And what I mean by that is just that small section of data that the AI, processes. And one sentence, maybe two tokens. They used to be more expensive. They're coming down. But that's just the world we live in now, right? Is, how do you manage that variable
Yeah.
cost and make a margin on that, right?
Yeah, and it's now that we know we have to embrace AI, despite compliance security reasons, we got to get that figured out. But now it's like, yeah, we've got to manage token costs just like anything else. And that's where I'm learning a lot, building my metrics app, which we'll show later, of just context windows. How much data are we sending? So anyway, we'll talk about that in a bit. But Monty, there are a couple questions here in the
Yeah.
chat, and which is perfect. And I'll take one because the other one is perfect for you. But hey, Allison has a question here. Is there a questionnaire or typical questions you could use or send more specifically with our CTO to identify what should be COGS versus OpEx? And Allison, yeah, what I do when I work with every SaaS company is I do a P&L deep dive. It's a bit tedious, but we go through every single GL account on the P&L, what's hitting there, what's happening, what expenses are hitting there? Is that right? Do we have enough general ledgers? Do we need a class structure, which Drew is asking about, which cues it up nicely for Monty for that. But I go through everything. And usually the founder knows pretty well, but as you get bigger, you may need to bring that CTO and have a CTO specific P&L deep dive. And that's where I wouldn't really, I don't know if I do a questionnaire, but I just sit down with him or her and let's talk about your expenses, and what are they, where are they hitting? If your AWS bill, what should be test environments, what should be production, for example, so you can get that figured out. I don't know, Monty, if you have thoughts on that
No,
COGS
I
versus
agree with you.
OpEx. Yeah.
Yeah. You do the deep dive, allocate if you must, but keep it as straightforward as possible. Sometimes you have a big AWS bill for R&D and one for COGS. Do
Hmm.
something that's reasonable so you're not gaming the gross profit percentages, right? And
Yeah. Yeah.
calculating things in R&D correctly. Uh,
And
so, regards to classes, I don't have a
yeah.
problem with classes, and this is sort of assuming that you're on, QuickBooks Online, which has limited dimensions to their GL structure. My preference is that I use a longer linear general ledger account structure with
Mm.
a department, then salaries, then related, and then what have you. And the reason I do that is largely because our FP&A models templates are set up that way, and that you can then reserve the classes for something else like channels and look at contributions through channels. So I use that as a variable, but they both work fine. Um, you want to address the MT's question about
Hmm.
the subscription panel and jumping around? Do you mean like
Yeah.
variability from month to month, or?
Yeah, Mark. And then Allison, yeah. And Allison, one way you could queue it up is just go through all the expenses, say at a GL level, vendor level, and make your guess. Send that over to your CTO so they can kind
Oh
of
yeah,
start thinking about it, and then have that meeting. So that could be a good pre-work, just to get them in that mindset. And then Mark asks, is it reasonable to see the subscription P&L line jump around more than professional services? And I'm guessing you're looking at the P&L on the screen. And it's like, no, if you're on cash basis, yes, subscriptions are going to jump around if you have annual and monthly invoicing. In this case, I would say based on, and this is kind of example dummy data, but if we're doing daily rev rec, usually you see February drop if there was no growth in your subscription revenue. So February was going to drop because there are just fewer days in the month. So that's probably what's going on here. But again, just some sample data. But yeah, whenever I see that Monty and you should probably see the same all the time, subscription revenue going from 200 to 250 to 150, then we know we don't have rev rec in place.
yeah, yeah. Unless there's some unusual amount of recouping revenue that you started
Mm,
the subscription contract and couldn't recognize it because it wasn't usable by the client. Something that's sort of an obscure ASC 606 rule. Not that obscure. It's just like, did you earn it or not? Right. That can make it
yeah,
jump around, but smoother is better. Yeah. Everything can be
yeah,
explained. Let's go to the next slide, Don. So these are the four key data sources. The GL makes sense to me as coming up to the accounting track. Why don't you expand on this structure that you sort of created and the importance of the various other drivers of the data sources?
yeah. And this is so important, guys. And before we even let AI loose, Claude, Gemini, OpenAI, whatever it is, before we let AI loose on our data, we have to structure our data. The better structure, the better metrics and accurate metrics we can calculate, and then put AI on top of that layer and then we're off to the races here. So in the last 4 or 5 years, I've helped 100 plus SaaS companies with their metrics, and I see a pattern. And I'm in the depths of their data, messy data. So this is the data set that we need in FP&A to spin up a nice FP&A process, to spin up the forecast, to spin up the metrics, to do variance analysis, to provide board insight. And of course, Monty mentioned financial, so we need financial data from QBO, Xero, NetSuite, Sage, whatever it might be. Then we need bookings data coming from HubSpot, Salesforce, whatever your CRM might be, because if we have no bookings data, we cannot calculate go-to-market efficiency metrics, CAC payback, cost of ARR, LTV to CAC. We're blind there. And if you're self-service, PLG, you may say, hey, Ben, I don't speak the bookings language. Well, we're going to derive
Hmm.
your bookings data from your MRR waterfall. We still need that. Doesn't matter. So bookings and then people, which is often overlooked, Monty, where we have no FT reports. FT by departments, it just doesn't exist. We need to know that FT history. And also, Monty, I don't know what you see here, but in that P&L deep dive, often find that the HR roster is miscoded, and therefore those payroll entries are miscoded to the P&L. So I don't know if you see that a
Yeah,
lot too.
it's very common. Yeah, we were doing due diligence for a VC in London, and this is the first time we worked with them. So I put two other CFOs and me on it, and we just sort of uh, deep dive into their forecast. And they had their CRO. Every C-level person was down in G&A,
Yeah.
and so CRO is pretty expensive person. So it threw off all of their metrics, and it just trickled through the whole reporting system. That's an example where putting the people in the wrong place had a big impact, and that's pretty common. People just don't think, like accountants sometimes, and it's totally reasonable. But that's where we come in and try to get it aligned properly.
Yeah, and that's part of that P&L deep dive process. And this is what I teach in my SaaS Metrics Foundation course at my academy. And just it's often overlooked. And it's a big win. You will get, say, 70% there with your P&L if you can get people and contractors to the right spot. Wages, taxes,
Yeah,
benefits, bonus, commission. Don't lump bonuses and commission together. Don't lump commissions into wages. Just that clarity. Have contractors coded to the right department, and your P&L will be materially accurate, then you can work on the rest of the non-wage expenses. And then we have
do you
customer
do
data.
you?
Oh yeah, Monty, yeah.
I was gonna say, do you? I mean, back in the day, pre-pandemic, overhead seemed like it was a bigger number, and you have to decide whether you allocate it across departments or not. What are your thoughts on that?
Yeah, the allocation of G&A, that does come up a lot with my course and students. And there's hard to put an AR number on there, but I'd say this is a bigger company thing. Maybe you're 40, 50 million, 100 million ARR, or you have shared services. So you're now thinking about, all right, we've got all
Yeah,
these business units. We now in the back office kind of have this shared services model where accounting handles accounting for all the different business units. And then, right, you may see an allocation of accounting, internal IT, real estate, things like that.
yeah. So I think the next one, the customer, I
Hmm.
always found when we were starting work with our clients that they put in some tool to collect subscriptions or something like that, but it wasn't really set up for the purpose of getting good data for metrics. And then they would say, look, we have this problem where we'll have three people at one company convert to a company-wide subscription. It shows up as churn, but it's not, it's expansion. What's the problem here? Did you find
Hmm.
things like that? And what's the importance of this customer data? Obviously, it's churn related, but
It's
more than
yeah,
that.
and this is like all of these can be problem points that I see. And then customer, so this is our invoice data. This is our subscription data. I was just on a coaching call yesterday with a nine-figure SaaS company talking about their customer cube. So we need invoice data, we need start and end dates, we need clear and distinct revenue streams. We can't mix usage with subscription revenue because the goal of this is to produce the coveted MRR schedule, right? Which is revenue by customer by month. Or people call that the customer queue, roll forward, a lot of different names. Top due diligence request. I'm sure, Monty, you see that. Send me
Yeah,
either
all the
your
time.
invoice data or your MRR schedule. And they're doing that because they want to calculate your retention. They want to calculate customer retention, gross revenue, and net revenue retention. So you have your invoice data, you create your MRR schedule, you create your MRR waterfall, which is beginning balance, new expansion, contraction, churn, ending balance. And from there, you can calculate retention. And of course, Monty, what I see talking to founders now is how do we segment that data? What are the firmographics, demographics of your customer base? If you have thousands of customers, they're not going to be satisfied just with give me one retention schedule. They're going to want to see segmentation of that data.
You're talking about cohorts
Yeah,
and
like yeah, different cohorts, or like if I have 5,000 customers, maybe it's like geography or
yeah,
company size, employee size, things like that.
yeah, that's important. That's kind of next level stuff, though. Don't you
Mm,
find that when you get to that point where
it
you're
is.
maybe you're certainly if you're PE backed with their focus on quantitative things. I think early on it's not something you need to worry about too much when you're really figuring out your product market fit and beyond and figuring out how to scale. But it's a good thing to start thinking about as a construct as to where is the most productive use of our marketing spend, where is our higher retention, and that cohort analysis is amazing for that, right?
Yeah, and I've been working with a founder for this one founder for 3 years, really nice business, growing great financial numbers, and thinking about an exit in a couple years. And those are the conversations we're having is like preparing that data so you can have that nice exit to private equity, so you can make it easy for them, right? If they start asking you questions and you go down this straight path, right, you're losing right there. And Monty, you have tons of due diligence experience here. But I think with this, it's like we've got to queue it up just to make it easier for them to understand the data. Yeah, we can't send them a mess. And I think the better
Yeah.
we do, the better due diligence will go, the better they can support a valuation number. And now we're thinking, all right, 2 years down the road for this founder and exiting, all right, what's that next step with this data? So how
Yeah.
can we queue up everything so, we just have everything at our fingertips in that data room?
It's pretty rare that you see when you're doing diligence, see really straightforward data.
Yeah.
And I think the one example, I think Jason Lemkin said, who was SaaStr and he had the SaaStr fund. He said, "Can you look at this data?" And they were, very forthcoming with the data, which is common, but they also just had it nailed. And
Hmm.
I go, and the director of finance there, he goes, "I just started 2 months ago. Did you wrap this up pretty quick? Because that's an amazing amount of work." He goes, "No, the CEO got really into it and just wanted to understand it
Hmm.
and went through probably some of your content and figured it out." And I was just super impressed. And it just made, there's only one thing I caught in that situation is a change in rev rec policy, but
Mm.
the gross versus net, which
Yeah.
is kind of a subtle thing. Do you get the, which revenue is it? If there's a big cost associated with the revenue, are you doing the net or they get the gross and then is the large cost part of COGS? And so it was just great. Other times, people say, "I haven't done much, so let's figure it out together." And that's great also because they're not trying, you're comfortable with they're not trying to hide anything. But when they're like opaque about things, that's when you start to, question more and want to dig even deeper. So just something to think about when you're presenting data to potential investors or acquirers.
Yeah.
Um, Anything else you want to wrap up on the data gathering and
No, I mean this is the foundation. Whether metrics, forecasts, FP&A, board reports, investor reports, like you have to start here. You can't just pass this, go start hitting up AI and asking questions. So yeah, and I'll show you in a bit like what you can do with this data.
right? Great. So let's go to the next slide, Don. So sorry for the eye chart here, but we wanted to put a lot of things in a few slides. So here's, the core accounting software, the invoicing software, RevRec software, and then the other one, and not quite as important and to the metrics calculations, but
Hmm.
sales and use tax compliance software. This comes up almost in every SaaS engagement we take on. And that is like, how are you dealing with sales tax? Where do you have nexus? And where do you have sort of economic nexus? And just it's something that always trips up an acquisition, often trips up a larger round, because it's something that you're expanding and you don't really realize it that you're creating this liability because you should have been registered and collecting sales tax in certain states. So just something to think about. But why don't you give us an overview of the core accounting software? If you have any preferences, what you like, there's new players on the scene. QuickBooks still pretty dominant. NetSuite.
Mhm.
What are your thoughts on choosing the right core accounting software?
Yeah, but this, and this is my latest seventh annual tech stack, and I put the link in the guys in the chat if you'd like to download the full report. It's like 50 pages now, 22 software categories, also by ARR size. And yeah, before Monty, we had the Power Four in accounting: Sage, NetSuite, QBO Zero. Now you've got Campfire and Rillet coming into play, kind of the Power Six. So we'll see how this plays out. But now, and you see this, Monty, you help tons of SaaS companies, but usually when founders come to me, they're usually on QuickBooks. Like outside
Yeah,
of the US, maybe Zero, rarely
yeah.
Sage, NetSuite, unless they're, scaling or bigger. And now we have Campfire, Rillet trying to come in and take everyone who wants to transition from QBO into a bigger ERP. And in my CFO community, this is kind of talk of the town now. It's like, well, should we look at Sage and NetSuite? Should we look at Campfire Rillet? And all these are good players. But I think now we've got to look at, all right, what AI capabilities, how are they advancing the product lines? So I don't know if I have any preferences here. I try to stay agnostic, but just try to point out kind of, the trends in tech stacks.
Yeah, no, that's perfect. We're the same way. You have to look at each situation, whether it's their volume of data, the number of subscribers. If it's enterprise with under 100, it's a little simpler sometimes. But you have to. I think the key thing is to look ahead several months because the longer you wait to do a major migration, it's just a lot more work. And if you raise a big round and thinking you're going to be expanding quite a bit, maybe that's the time when you have the capital to sort of go through. It will help streamline reporting, give you greater reporting flexibility with the more complex chart of account structures that the bigger systems have. And they're also, more, AI native, so to speak, which could add efficiency to your finance and accounting department. Talking about the invoicing software,
Yeah,
critically important, especially for recurring subscriptions. But
yeah, definitely. I think we've got it. One, it's like, what's our core GL? Where are the debits and credits being posted? And then now this is kind of a bigger revenue management category. I think kind of we could say safely that they're calling it, which is, invoicing, rev rec, maybe some metrics, dashboards, but invoicing, right? Maybe QBO can't handle the complexity now. We keep QBO as the debits and credits, but now we've got to use Maxio or an Ordway or ChargeBee or all these other players. So you can see in invoicing, we may be invoicing out of our general ledger, or we just need a little bit more robustness there, and we add a point solution that integrates into
Mhm.
that software. Or if we have usage pricing or credits where it's like, yeah, we can't do that with QBO, let's use a Maxio or whatever it might be. So now we point solution that in, and so we can have a nice invoicing process, which is so key, right? Because it just becomes too complex, too hard, if we don't have a good process and a batch process with invoicing.
Yeah, we recently helped a PE-backed company transition from one invoicing system to another. And we actually came in after they had done it. And it was a challenging transition where they invoiced out of both systems for a couple months,
Mm,
confusing
yeah.
everybody. And we had to manually sort through. It overwhelmed their customer support. And so it's something that, mission critical type system. Be very careful, find the right one, be methodical in your transition to the new one.
Yeah, and I'm glad you mentioned that because I see that a lot where we're invoicing out of two systems, maybe three. And boy, then, okay, that's maybe fine, not fine, but then trying to pull that together for revenue forecasts, for metrics. Now I've got to pull invoices from three different systems, create a combined MR waterfall, and it gets really, really tricky. So I'd think thoughtfully about where you want invoicing to sit. And if it can sit in one spot, that's all the better.
Great. So let's proceed to the next slide. Now that we have sort of the foundations, the sources, and the methodology for creating metrics, why don't you go over your metrics framework here and how you've organized these?
Yeah. Yeah, definitely. So this is my framework, and there are a lot of boxes here, but we move left to right through this maturity framework. So if we're early stage, maybe we're just, if we're a million ARR, we're just focused on growth. Where's growth coming from? Let's make sure we track that in our CRM system or through our MR waterfall. And then, right, we're acquiring customers. Then it's about retention. Are we keeping them? The
Hmm.
typical suspects here, logo, GDR, NDR, maybe we get into renewal rates if we have multi-year contracts, and RPOs becoming more of a thing, remaining performance obligations, so growth, retention. Now, we're scaling. Maybe we're 3, 5 million ARR, 10 million. Now we have to understand our margins. Again, Monty, we talked the SaaS P&L. Now we've got, all right, how is our margin profile playing out here? Any red flags, as we scale? And then the fourth pillar, our financial profile, Rule 40, OpEx profile, EBITDA, good metrics that come off the properly constructed P&L. And then finally, efficiency. So not just go-to-market efficiency. And again, we talked, if we don't have bookings data, forget go-to-market metrics. We can't calculate those, but also org efficiency. And one thing I work really closely with my founders on is the ROSE metric. So we calc rev per FTE, but ROSE metric, we don't care. I don't care how many FTEs we have. It's the amount we invest in our employee base and our contractor base. And we want that line moving up and to the right. So eventually, this is the maturity framework we need to operate within so we can see what's working, what's not working. Monty, and again, I talked to a founder this week and they're like, kind of don't know where I stand. And it's like, yeah, I wouldn't know until we kind of push the 4 key data sources through this process. And then we can see, all right, what's working, what's not working, what should we focus on?
Yeah, very helpful. Quick point on the RPO. It, that essentially deferred revenue balance, is it
Yeah.
more?
Yeah, so RPO, right? Public companies have to disclose. So deferred revenue plus the
Oh,
uninvoiced amounts sitting in multi-year contracts. So if we have the
okay.
software backlog or years 2 and 3 of a multi-year invoice, which now we've got to track in our CRM system, that adds to deferred revenue. And this, it comes up a bit in private SaaS, a little bit more. But again, this is a stickiness measure. If this number is increasing, that's a good thing, right? The more multi-year contracts we sign, that's a good thing, so it's there. And, again, if you're under 10 million, maybe not. But if you're 20, 30 and growing and say you're raising a big, I don't know, Series C or D, then that could be a good complementary metric to GRR to show that RPO is growing.
Yeah, that's a great point. So I love these metrics. I love the way you've laid it out. I
Oh,
put in
Chris.
bold my favorites. Everyone's got their favorites that they give out. But I like to set up the structure for LTV to CAC ratio early on, even though it's somewhat meaningless early days, right? The founders are selling. Sometimes you founders in G&A and not in sales, and then you're
Yeah.
ramping up. You're figuring things out. You're not going to have beautiful metrics at that stage. I just like to get our clients sort of focusing on these for later. So also, so you're speaking the language, and when we do the FP&A, we project proper, better metrics results as the company matures, so we can tell the story of where we're heading. Would you agree with that concept, or?
Oh, you definitely. And that's where people say, oh, SaaS metrics backwards looking, but I am calculating historical metrics and I'm also forecasting pretty much every metric here. Maybe not retention, that's a little harder, but also forecasting these. And that's important so we can be proactive. All that GTM spend, well, is it improving? Is it going where we thought, especially in the budget process? So yeah, definitely, I'm forecasting all of these metrics.
What do you see are some of the common problems when people say, "Oh yeah, we calculate the metrics," and you're like, "That's not how you do it." I've seen some egregious ones where they didn't doing LTV, didn't calculate gross margins, things like that, and they said, "Well, our early investors told us to do it that way," and I'm like, "You may have misunderstood." But what
Yeah.
do you see?
Yeah, and Chris in the chat reminded me I forgot to mention Rose metric. I also expanded it to include internal agentic AI spend. So if you're replacing people on the org chart with agentic AI agents, that also has to go into the Rose metric now because you've got to have ROI on that. So thanks, Chris, for that. So I've expanded that. But yeah, gross margin adjustment of CAC payback period. LTV that's not gross margin adjusted. And then so I'll try to think sometimes boy, I hear some really wild things where they're like, boy, it's like, an investor told me this, and or someone said, and they're like, boy, I don't know if they know the software business, you know? So asking for LTV to CAC too early on, if you're just a million ARR, and someone wants to see that, well, you can produce it, but it's not going to mean much, so right metrics at the right stage. But
Yeah.
usually what I see is we didn't do the diligence in our four key SaaS data sources, that we're not pushing the right data to these metrics, and also the sales and marketing allocation for CAC. How much should go to new? How much should go to expansion? We're annualizing retention by multiplying churn by 12. You got to take it to the power of, incorrect gross
Mm.
profit calculations. So I'd say it gets a lot to the foundation of the data, but definitely, yeah, there's a few formula tweaks that people miss.
Yeah, those are kind of subtle. I've seen some more obvious ones where they say, well, we don't include it in churn if we couldn't properly onboard them.
Oh,
It's like, so
yeah.
so the problem is in your onboarding process. And they're like, oh yeah, we or they could sell anything, book things, oversell it, not deliver. So it's sort of,
Mhm.
it's a great example of metrics highlighting a business problem that you need to solve, which is one of the things I love about metrics beyond just reporting to your board and investors. But I think you know I'd love to see a demo of your software because it sort of
We,
has transparency into how metrics are calculated, which I think
Mhm.
is just a wonderful feature. Do you want to, Don, can we queue up his
yeah,
demo?
Yeah, I
I'll
can
stop sharing my
share.
screen. There was one more question that just came in
Yep.
Oh
here.
yeah.
As a CFO, what would you consider when getting a RevRec tool? And then I'll stop sharing and you can tee up, Ben.
Monty, if you have any thoughts there.
Yeah, I think, it's when it starts in advance of it, when it's getting cumbersome and error prone,
Hmm.
because spreadsheets can take you pretty far. You can figure things out, but when you want to go to a more complex system, it could be in conjunction with an upgrade to a NetSuite or a system that may have it in it, or you could stay on QBO or another system and then use this very specific RevRec software. But I think you don't want to have problems and inaccuracies and have that reporting all the way through the board deck. So doing it in advance of need, so to speak. That's my thoughts.
Def
What about you, Ben? What do you see?
yeah, definitely. Yeah, I think one is, can it handle our type of revenue streams, and then, subscription usage, things like that. Also, where's the data coming from? Are we going to invoice out of that revenue
Yeah.
management system? Are invoices going to push into that revenue management system? Do we have Stripe? Can it handle credit, payment processing? So just it's kind of gets to the hookup of the data sources. And then two, this should be a straightforward process. Like I had a RevRec process where it was push button, ran all the invoices through the RevRec, and it created the batch journal entry, hit post, done. I had my deferred revenue ledger that I could tie out every month. That's key. That is so key to tie out your deferred revenue balance by revenue type. Uh, and then from there, right, RevRec schedules, reporting, SKU reporting, so thinking about just that data flow, but this should be easy to tie out, and then also auditable. So yeah,
Yeah. Yeah.
yeah,
At some point, an audit may happen in your future. They're grueling, but they're a great, I think, preliminary step to an
yeah,
acquisition, which is that times five in complexity. But it'll help you with that process. So is maturity as well. So
yeah, yeah. And then Don, can you see my five pillar dashboard here on the screen?
Yes, yes, sir.
Okay, guys, real quick, and I'll show you like the power. So those four key SaaS finance data sources and I know somewhere within your company, they are sitting in spreadsheets in a system. It's just a matter of getting that structured. And then with that data, so CRM data, booking or financial headcount, invoice data, this is what you can create. And we saw my PowerPoint of the five pillar SaaS metrics dashboard. Now this is how it comes to life here. So we can calculate all these metrics just with those data sources. And actually, I just released this. I just coded this, within the last 24 hours. So it's V1 of this. But now we can see, all right, growth. How's our growth running? How's our subscription net revenue retention? Now I'm benchmarking it. I'm running 106. Top quartile is 112. median is 105. I'm getting my metrics benchmarks from Ray Reich, who has the best in the business. And then we can dive into that. If I go here, we can see, all right, what's the beginning MRR? So we can see, and the whole point of this is to make it audible, traceable, so we know. So this is board ready, investor ready, and we can see. And also a big thing with this, with some dashboards is, right, well, my net revenue retention, actually, I like to look at it on a T3M annualized basis or a T6M. That's that subjectivity. So we can control that. Just if I go into CAC payback period, I'm sorry, if I go into efficiency or in CAC payback, right? My CAC based on my average sales cycle, maybe I have a 3-month sales cycle. So we're going to adjust the CAC there. Maybe my ARPA, I'm going to look at just those recent wins. And then my subscription gross margin, I want to use a T6 period because I need to smooth it out a bit. And so we have that fine-tuning control, and just like how I do this in Excel, so we can see this. So now we can see historical and forecasted metrics. So I go through, each of the pillars here. We've got P&L, we've got growth, we've got retention, our margin profile. So if we go into subscription margin, same thing here. We can see this on a trailing basis, and this is just kind of demo data in here. So it's calculating. So it's amazing. We can do all this with those 4 key SaaS data sources. Of course, we can check out our MRR schedules. Actually, I don't know if I have any data loaded here. And then, of course, right, we've got to implement AI. So now I have an AI engine in here that can access all this data in it. And as far as security concerns are still a big deal. None of this sits in the AI model. It's just we're making a choice. If we want to use AI, it pushes it over, brings it back, and nothing sits over there permanently. So now we can query our data, and I built this so it can spot flags. Based on the data in here. All right, subscription DR is falling. Then I can click here, and it's going to tell me what's going on here. So again, so much we can do now with this data, especially with the AI overlay, to see what's going on with our data. So this is kind of that SaaS CFO utopia, that we could interact with the data. We can help AI, provide some additional insights. And then also we're ready for the board, we're ready for investors and FP&A reporting.
Yeah, it's great. I love it as a tool. I love the transparency, the fact that it's less dependent on spreadsheets and humans, and then it's got the AI capability because it can just, we all have biases as humans to a degree, and AI can sort through and find things that we may have missed. So
yeah. And then just so much potential you can see, the AI kind of analyzed our GRR trends and, driven by a decrease in churn MRR rate, 14,000, so now it can help us identify this, just that, maybe that would take, 10, 20 minutes just to look that up. So, so I'm just rolling this out, to my community, to everyone. And if you are interested, just email me at ben@saascfo.com if you'd like to learn more about this. This is kind of all that hard work that Monty's team is doing with bookkeeping, that we're doing with the 4 key SaaS finance data sources. Now, we can make this even easier to do. So, and Mark said, looks nice. Can you show the ARR waterfall again? Does it have price increase? Actually, on this one, I don't have any. Actually, I do have some data loaded here. Right now, there's no price increase. It's new expansion, contraction, churn, kind of the basics. And then thinking about, reactivation layers, can we identify price increases? So, but, getting the fundamental block and tackle out of the way, then you can see, all right, we've got the retention calculated down here. And also this comes up, Monty, a lot with founders like, hey, Ben, you said I have all this churn, like what happened with churn? So now I can click in here and see exactly who churned. In this case, these are customer IDs. You could put the customer name, but now exactly we know what happened with the MRR waterfall in that month.
Wow, it's powerful.
So rolling this out. So I'll put my email in here, guys, if you do want to learn more about that. But this is kind of the end state utopia for me once we prepared all this data.
Yeah, a lot of work to get to that point, but it's a great way to present it, and your board and investors and your management team will love it. So we're open to questions. You may wondering, how do MontPac and Ben interact? Ben's got great content. He's coaching founders and CEOs and CFOs. And MontPac is, we're the outsourced accounting solution. We do everything but income tax preparation, but we're very specific knowledge of SaaS accounting metrics, as well as the tools that are commonly used, like RevRec software, recurring billing software, and what have you. We know all the systems. So, reach out to us if you think we can help. Uh, we're not, to into a hard sell process. We see if we can, we free assessment, see if we can help improve your operations, your accounting operations. And we do this at an incredible value. If you see the heat map behind me, you can see where we have offices in the Philippines, which is our operations center, New York, West Coast. And then we have clients all over the world, several in Iceland, which is really nice, some of the nicest people in the world. But really, Middle East, Hong Kong, Singapore, heavy concentration on the West Coast, Canada, Texas, what have you. So Ben, you want to talk a little bit about your services and
Yeah, definitely. And I talk to a lot of founders and help founders, and one thing, bookkeeping always comes up. Either they're happy with their bookkeeper or they're not. There's always a line there. So yeah, Monty and I known each other for years, and usually I send folks over Monty's way if they want to clean up their bookkeeping, have a nice clean process. Because sometimes they're not, ready for CFO services. Because the bookkeeping is a mess. So you're just going to waste money on me if you start paying my retainer until you get the data cleaned up. And then, all right, let's do something with it. So today, guys, if we haven't met, have my blog at thesaascfo.com, have my academy at thesaasacademy.com, where I have a ton of content, have my newsletter, and then also helping SaaS founders on a fractional basis, queue up all their data, their metrics, their forecasts, everything they need for board investors and due diligence. Do a lot of coaching on the SaaS P&L, on customer cubes, and so on. And have a couple podcasts. So live and breathe software finance. And I put my email in there. Feel free to email me at any time. And then I also put a link to a 101 course, if you want just some of the basics, if you're like, hey, I need to see the P&L again, COGS versus OpEx, and I'm adding more content there, and it's absolutely free. Yeah, that's it for me.
Yeah, and Jeff asked a question. It's like, would
Oh.
MontPac be a good solution for bookkeeping for
Hmm.
Series A SaaS? And definitely, that's kind of our sweet spot. We get started early on. We like to set up the proper structure so you don't have to change things later. We start pre-revenue, just doing the basic. And then when you get to the Series A stage and beyond, we're still involved. We have clients that are small public companies, unicorns, some very sort of large, enterprises, and our role may change. You may have some more internal resources, but at that point, it makes sense. So you can keep it lean early on because you don't want your, G&A to be a big contributor of burn. You want things that drive value in the company, like top line growth and sales and marketing. So yeah, I'd love to talk more.
Yeah, and then Monty, I don't know what you see, but I see a trend of where now we have a head of finance coming in internally once they get to some point, and then but continue to keep bookkeeping outsourced,
Yeah,
for
very
just for an
common.
efficient
Yeah.
process and just scale it up that way. So you're seeing kind of different models now in the back office, I think.
Yeah, no, I think that's true. We work with one PE firm where they plug in a full-time CFO, director of finance, depending on their size, and then they're often outsourcing everything below that in the finance and accounting org chart. It creates a couple things. One is specific industry knowledge that some firms have, including MonPac, of that industry, and just the scalability. You can grow by the hour versus by the FTE, which is that step function increase, and so it's always sort of right sized. So it's worked out, very well for us. And that's why, we're 90% referral. We do have webinars like this to educational, but a lot of it is just, hey, you should talk to MonPac. And I know Monty, and it could be a VC, a banker. It's typically someone who looks at the financials and go, yeah, I think these could be improved, in a nice way of saying it. And
Yeah, and don't wait too long, guys. I mean, I see, just bookkeeping that's overlooked. It's not a priority, which makes sense. In the beginning, you're not too focused on it, but it just gets messier and messier. Then you got to clean it up. Then you go through due diligence and everyone wants a three years of financials. And then maybe we have only one good clean year. So use that SaaS P&L foundation, my SaaSified accounting foundation, and that will take you far. Just set up that chart of accounts for SaaS.
Yeah, that's a great point. And also, to look other things like R&D tax credits. Are you capturing R&D? Is this something you should be thinking about when you have a proper set of books? It opens up the discussion. And I think also any service provider that you use should bring more than just their service. They should bring their network, like recommendations on good tools that'll fit you now and also through 10x growth. And if you can, when we refer one of our clients to a VC that may be interested because it's a good fit for their portfolio, they're delighted. And the VC is like, okay, yeah, you work with my other portfolio companies. I like your work. I trust you. This person is one of your clients. Yeah, we'll give it a good look. So little subtle things like that can help. You don't want to oversell that. It's not like a service we provide, but formally provide, but it's something we do. So I think if there's any other questions, we could wrap it up under an hour. I think we covered a lot of solid content. Thank you so much for participating, Ben. Your insights are always, spot on and super helpful.
Yeah, thanks, Monty.
Awesome.
Enjoyed it. And Don, and we've got our emails in the chat, so feel free to reach out to us.
Yeah, for sure. This concludes that. Everybody, thank you so much for joining today. I hope you got some golden nuggets to take away from today. Thank you for your time. Ben, Monty, appreciate your time. Thank you so much. Everybody, enjoy the rest of your day. Thank you for attending.
Thanks, guys.
Thanks.
See ya.